Alright, so I'm going to go over the technicals on SPY, BA, and Visa. So first off, I'm going to start off with SPY, and I know there's a ton of lines on this chart. So I tried making the less important trend lines more transparent so we can focus on the more important ones. So right now with SPY, from around early April until early June, we were trading between three ranges. This is how I was looking at it. We were trading between one range, the lower range, a mid-range, and then a higher range. These four trend lines, we were in between three ranges, and then we eventually broke out on Memorial Day. So this was the lower range right here. We started and we popped up, and then we were consolidating between the mid-range, and then we entered the higher range twice between early April and early June. So between a few months, we entered this upper range twice, besides up here, which was the third time. And each time we entered, we would immediately bounce down and then go back down to the lower range. So for example, right here, we were trading between the middle range, we bounced up in the upper range, and we immediately dropped back down to the lower range. This was about a 16-point move or 14-point move, 288 to 272, a 16-point move right there. And then we ended up rallying back up. We had a fake breakout above this upper trend line, and then we dropped right back down to this lower range, which was 297 to 278. So what was that? 277, 19, 20-point drop from there. And this was around the time that earnings was coming out. We were getting better than expected earnings, so we rallied up, broke out. After hours, we ended up dropping right back down to this lower range, right in between this middle range. We then consolidated through here. We then had a drop through here. This right here there was a head and shoulders pattern forming right here on the longer time frame. This is an 8-hour chart. So this was the left shoulder right head, and then this is the right shoulder right here. Once we dropped through here, I know a lot of people took this trade and it looked great. We eventually cracked through this lower trend line, and then it was a fake breakout, and then we came back up. So this was a head and shoulders trade. This was a good trade, but if we broke out, but then we ended up coming back up. Then we ended up consolidating through the middle trend line, and then this is where this purple technical level comes in. This is this 297 area, and this was an area of very strong resistance that started all the way back in February. We ended up coming down, hitting it as resistance, bouncing up. It was support and resistance again in March, and then it acted as resistance, not quite hitting it up here, but over here 1, 2, and 3 different times it acted as resistance. This was the level we were trying to break, and we got into a tighter range over here. On Memorial Day, we eventually ended up breaking out, and then we ended up trading in a very tight range in this upper level right over here. So I'll move to a shorter time frame. This is the 30-minute time frame. This was after Memorial Day. For about a week, we were trading in a very tight range. This was a very hard market to trade. We were just bouncing, consolidating through this tight range, waiting for a breakout. We had a fake breakout above here. This is why I always wait for a retest of a trend line before taking a trade. We broke out, and then we ended up coming right back down. And actually, if you go right here, you can see that there's a slight trend line that was acting over here a little bit. Nothing special, nothing too strong. That's why it's faded, but it ended up coming down and acting as resistance over here a bit. And then it did flip to support over here. So we broke here, and then eventually we ended up breaking out of this upper trend line right here. On the 2nd, we ended up after hours rallying pre-market New York. We took it up. Now I wouldn't have taken a trade here because I would always wait for a retest, because we could have came right back down the next day. But we officially did end up breaking this trend line for the first time and holding it after hours. We did break out, and then on the 4th, we ended up coming up. We hit this little level of resistance at 313, came all the way down, and at the end of the day, we actually tested this trend line right here. We tested it, we made a nice lower wick down, and then we shot right back up, showing that people were buying it up. And then on this green candle right here, this would have been a really nice trade to take on SPY. if you had a stop loss below this blue trend line, and you could have rode it out and you could still be holding the trade if you were planning on swinging it longer term, or you could have sold today. This was about an 11 or 12 point move from if you got in right around here, which would have been insane on SPY. So now talking about that, let's look at where it currently is. If you're looking to take a trade on SPY, first off, I wouldn't look to go short right now. I definitely wouldn't look to fade the market. I wouldn't look to get any puts right now. I would really only look to go long just because the momentum is on your side. There's a lot of momentum right now. We had good economic data that came out today, which is why we rallied so high, and investors are looking for good data. Any good data they can use to bring the market higher. So as far as taking a trade on SPY, we do have a little bit of resistance right around here, the 322 to 326 area. So we should watch that going into the next week. That's the area I'm going to be watching. And if you want to make a play, I would now FOMO in here if we don't drop below. We do have a little bit of support right around 318. And even if we do test that, I just wouldn't get into the trade. The risk to reward is not there in my opinion. We're overbought right now, and if you go to here's SPY, you can see, I mean, it's obvious I didn't even have to check, but on the 4 hour we're overbought, I'm sure. On the 1 hour we're overbought, so 8 hour we're overbought. We're pretty overbought right now, so I just wouldn't enter a trade. The risk to reward isn't there. I would be patient instead. And I would wait for a pullback around this 314 area. This is where I would look to go long. 315, 314 area, and again, we have this resistance right around 322, so you can watch for a possible pullback if we test that area. So that's on SPY. I wanted to pull up this quick chart. It doesn't really have much to do with SPY, but if we do go on here, I just wanted to share something interesting about how retail has been buying up the dips, specifically Robinhood investors, and you can see how since Hertz went bankrupt, they skyrocketed 825%. This, usually never happens. That's not what investors normally expect for a company that declared it can meet its debt obligations. And it's up 825%. And while retail investors on Robinhood loaded up on the stock, billionaire investor Carl Icahn liquidated his entire stake at 70 cents a share for a loss of more than 1.8 billion. Now, Carl Icahn had the biggest stake in Hertz out of anyone. He had the largest amount in the company, and he liquidated his entire position at 70 cents a share. And right now the stock is trading up, I think, around $2. It hit all the way up to $4, which was insane. It's at $2.88 right now, and he sold near the low. This isn't the first time a billionaire investor, somebody that is a veteran to the market that's been investing for decades, has lost to retail Robinhood investors. It happened with Warren Buffett on the airline stocks, where Warren Buffett, he sold at the low and retail bought it up. Robinhood investors bought the dip and bought it up and bought up his positions that he was selling, and ultimately the Robinhood investors are the ones profiting off of it. So I found that quite interesting, and the same thing is actually happening with the overall market. This is mainly retail buying right now. Smart money, hedge funds, banks, the big players, they're very underinvested right now, and they're still in safer investments. And while we did have a rally, they may start to invest in the market. I don't know their plans, but this is mainly retail buying, retail FOMOing, and retail wanting to buy the dip if they haven't already. I just wanted to point that out. It's been working first on Hertz and then on American Airlines earlier with Warren Buffett. So both of these billionaire investors that are veterans, know a ton about the market, widely respected, both took a loss compared to, the Robinhood investors. All right. Next one is BA. Now, my charts for BA and V are not going to be as complicated or as precise as they are for SPY. There's a lot less technical analysis, but it's pretty simple and I could go over them quickly. So right here, this was a great time to buy shares or just a longer term position. like a month long or a multi-month position. We did have this very long term, this is on the 4-hour chart, a longer term trend setting up right here, starting all the way back in March and breaking out in late May. So this took about 2 months, but there was this very strong level of resistance right here, and then a downwards trend line forming, causing it to squeeze, and then eventually it did break out. I do know a few people that took this trade and then they got out right around here a week later or so. This was a very good trade. But if you did hold your trade from the 130 area and held it up to 208, you would have made a ton of money. So recently BA spiked up in price over the past few days. When this first started, I was at work. I don't know exactly why. I've heard it's because of Amazon. They're using Boeing planes or something like that. But I really don't think it matters the reason why. It's just that they've been going up so much. And again, this market has been very risk on this week, meaning investors are pulling out of safer investments such as tech. You can see Microsoft is not up as much as other companies, as in airlines or hotel or travel. This is a very risk off investment. Microsoft has been consolidating the past week, but stocks such as Boeing, it's a very risk on investment. It's a riskier investment, and it means that investors are feeling comfortable like on the overall market sentiment. So they're feeling comfortable about it, and they're in it now. As far as support and resistance lines, if you look on the daily chart, it does have a lot of gaps to fill. I would not look to go long right now, especially if we open green on Monday. It's just so much FOMO at this point. We do have some resistance at 217.55 that we hit today, and we immediately drop back down. And we do have this trend line right here. I could pull up this 8-hour chart. We do have this trend line that started here that's coming down, that if we do break this resistance that we hit today, we may see some more resistance around this trend line right here. And then if we do break that, we have around the 240 area some resistance. As far as support, I would look for a pullback to 187. Honestly, if we pull back to 187, that's when I would look to take another position on Boeing. But anything higher than that, I'm just not even looking at it. I just feel like it's FOMO, not worth it, and I'd rather be patient. But today, if you were in chat, options general, you know, I did take a trade on Boeing today. I was waiting for it to retest this 205 to 200 area right here, and I was waiting for confirmation of a reversal. And we were in this intraday. Ultimately, it was a squeeze at the end. It ended up compacting, and then it actually stayed in it until after hours, where it kind of did break to the upside. But we'll see where it goes on Monday. It could honestly go either way at this point. I was waiting for a breakout to the upside at the end of the day from Power Hour, but we didn't really see that with Boeing, and we just stayed consolidating inside this wedge right here. So we did drop in right here. I was looking at this area to buy, this demand zone. This is a right here, or I think it's 1 hour, 30 minutes. Yeah, this is a 30-minute demand zone. This is where price was balanced. Investors were agreeing on this buying and selling, and then eventually it shot up, and there was most likely unfilled buy orders around here waiting to be filled if the price came back down. That's what I was looking for, and sure enough, price did come back down. We immediately bounced back up, bounced down, and then we ended up bouncing back up again. So this was the area I was looking to buy in to take a swing trade, and I was waiting for confirmation. Once we came down, we were holding this trend line. I saw we were breaking through. We came up, candle closed with a nice lower wick. Then we had one green candle, a nice other green candle. This was about 4 points in 10 minutes. And on the second green candle right here, I did enter a position. Did get a 280 call, July 17th 280 call for $320. And I was looking to swing it, but it was up 25% by end of day, which is kind of odd because the stock was trading around the same price I bought it at. But it was up $80, so I ended up securing profits on that. And yeah, I do know a lot of people are swinging. I would be careful though, just because of how overbought it is. It is going to pull back, whether that's next week or in a few weeks. But then again, I do see the reasoning why it's up 1 to 3 days. In 3 days, it's up like 80 points, 70 points. And that's just because of the range it was trading at before. It got so beaten down. And if we are in a risk-on environment, investors want to be the first one to jump on these stocks that are still beaten down and that have a lot of potential. And right now, Boeing, it's a more higher reward, lower risk stock to get into than if you look at Apple, that's trading at all-time highs right now. This is a lot less reward and a lot more risk. Same with QQQ. So there's that. So again, key levels on Boeing, I would be watching to break through this 217 area, and I would watch for resistance around 187. It is like a larger range, and that's just because of the range the stock's actually been trading in, like 15 to 20 point ranges, which does make the support and resistance levels wider. So there's that. Next we have Visa. I personally, this is the first time I'm actually looking at the stock. I didn't take any plays on it. I do know a lot of people in chat took plays on it, and someone asked me to go over it, so I quickly went on and just looked for some technicals, looked for trend lines, support and resistance, supply and demand zones to look at, and I formed some. So hopefully this is accurate and hopefully this is good enough. But I did notice that the 200 area is a very strong resistance area because we do have this supply zone right here. Again, price was agreed on, and then we had a big drop down. There can still be some unfilled orders around 200, unfilled sell orders, which does make resistance quite strong. And then on top of that, we do have this trend line right here that held a few times, held over here, and then we gapped down. So once again, this is going to come in around 200 on Monday. So kind of have this double resistance to break. But if we do break through 200 on Monday, that's a very good sign. That's very bullish. And after that, it's basically clear, and then you have this gap to fill around 204 to 28. So I'll just be watching on Monday for Visa if you're playing it, for it to break the 200 area, and that's really about it. If it doesn't, and if it comes back down, I would watch for it to hold the 194 area. It's been holding that pretty well. Originally, it was resistance, then flipped into support over here. And if it does fall through 194, you do have this other trend line that's coming up that will be around 194 over the next few days. And I'll watch for it to hold this blue trend line that originally was, again, it was resistance, and then old resistance turns into new support. So it's been acting as support. So I'd watch for it to hold this trend line. So it is ultimately at the end, it is kind of squeezing. It's coming, this trend line is getting tighter, and then this trend line is getting tighter. So it is looking like it's going to break out in either direction. And it really all depends on which way the overall market's going to go. If the overall market's green, I'm betting we'll see a breakout to the upside. And that's about it for that. If you guys have any questions, please let me know, or suggestions. I would love to hear any feedback. But I mean, besides that, yeah, that's about it.